Hello, everyone, and a huge welcome to the ATAS webinar. We are thrilled to have you join us on YouTube today. We are incredibly excited to introduce our special guest, DejaBrew, who will be leading today's webinar. He's going to walk us through the fascinating topic of trading patterns using delta and footprint. And remember, the best way to learn is by doing. You can put all the strategies DejaBrew shares into practice on the ATAS platform, absolutely free. Just click the link in the description to download the platform and get started. So, all right, let's not waste any time. DejaBrew, the floor is yours.
You're welcome, guys. I appreciate you guys stopping by. So for today, we're going to be talking about delta footprint. I'm going to go into a few examples as I'm talking about the topics. I'm going to switch over to the platform and show you guys some examples that have happened over the past few weeks, even some that have happened as early as today. Let's go ahead and get started here. So for the topics for today, we're going to talk about delta clusters, delta absorption, one directional delta, and the delta squeeze pattern. So what I mean by delta clusters is they are nodes of delta that can be used as support and resistance. For delta absorption, we're looking at large delta coming in, but the buyers or sellers are not getting what they want. For the one directional delta pattern, we are looking for very strong candles that are filled with delta on one side, bullish or bearish, kind of like volume nodes. And for the delta squeeze, we are looking for a strong reversal of absorbed delta. So before we get started, for you guys that are here that are not familiar with my channel, just a small timeline of kind of how I got started. I started full-time trading back in 2016 to 2017. Before that, I traded for about 2 years. I started streaming back in 2018 as kind of a personal journal. I wanted to just kind of record my thoughts, record the screen that I was using, and just mark out little notes here and there. And people actually started watching me while I was doing this. I didn't think I was going to get any viewers back then, but they enjoyed what I was doing. So I started pushing out more content, more teaching material. And as of today, I live stream every single market day, Monday through Friday, using ATAS. Okay, so a couple of things you guys need to know, a couple of terms you need to understand that I'm going to be using a lot in today's presentation. The first term is obviously delta. Delta is the difference between market buyers and market sellers. So if you're looking at, say, a time in sales or like a depth of market, you guys can see the orders coming in. And typically, if you're looking at, say, a DOM, the DOM is going to be the limit orders, the people who are putting their orders in on the market. They're not executing them immediately. They're putting them out there, waiting for them to get filled. Now, delta is showing you the market traders, people who are pressing the market buy or market sell button to immediately get in or out of their trades. So delta is taking all of those market orders and putting them together and showing you the difference. Is the difference a bullish difference or a bearish difference? Do you have more on the buy side or more on the sell side? The next term is delta cluster. What I mean by a cluster is it's a node of delta that is showing a large imbalance on one side. And I'll show you some examples of this here in a bit. But basically, if you guys are familiar with volume profile with a node, it's a delta node. So not just a volume node, it's on the delta side. So we want to see a ton of bullish delta clustered together in one area, or a ton of bearish delta clustered together in one area. And typically what I mean by a cluster is, let's say, within a few points. So if you're trading on ES, that would be maybe 2 points to the upside, 2 points to the downside, something like that. Next term is volume profile. Volume is on a volume profile, volume is being shown horizontally, which once again, I'll show you some examples of this here in a little bit, instead of vertically. So typically people look at volume on the bottom of the chart, where it's just showing the volume for that candle. but a profile is showing you the volume price by price, tick by tick. And then I know a lot of you guys are going to have questions about my settings. I will go over all of my settings at the end of the webinar, and I'm going to go over indicators, pretty much every little detail you guys want to know about. Just ask me a question, and I will get to it. And if you guys have any questions while I'm teaching these topics, please feel free to put them in the chat, and I will get to them. But okay, so for the first example here, we're going to be talking about the delta clusters. And as we talked about earlier, it's a node of delta that is showing a significant imbalance towards one side. Typically, they range from a few ticks to a few points. They can be used as support and resistance nodes. And what we want to do in our trading is we want to be looking for retest or reclaims of these nodes. So a couple of examples here. We can see that on this candle here, and by the way, how to read my candles, these are 30-minute candles. This really small outline is the candle body. And then on the right side, the blue bars, that is the volume profile that I talked about earlier. So instead of seeing volume on a vertical scale every candle, we're looking at it inside of the candle, tick by tick. So on the right side is that volume profile. And then on the left side is the delta profile. It's showing you, a delta ladder. So it's showing you if it's green, there are more bullish orders, there are more buy orders. And then if it's red, there are more sell orders. Okay, so that's how you read all these examples. So right here on the bottom, we have a bunch of bearish delta in this span of, let's say, 2 to 3 points. So we have a lot of bearish delta kind of stacked together. This would be what's known as a stacked imbalance. An imbalance is basically just showing you that there are more sellers than buyers. It's imbalanced to one side. So we have a bearish cluster here. And what I typically like to do when I'm trading is I mark these out with kind of a box just to say, okay, let's keep an eye on this box for when price is either retesting it or just completely breaking through it. So we have a cluster there, and then we push away from it, and then the market kind of stalls out, and then look at where it retests. It comes all the way back down to that bearish cluster. So that could have been a point where we're like, hey, that's a pretty strong retest. I might want to be a buyer there, and then maybe put my stop loss somewhere below that level. So another example here would be a bullish cluster. We have a cluster on the top of the candle. There is a ton of bullish delta here, 2,500, 1,400, 1,500, 17, just a bunch of buy orders on the high there. So normally I would draw out a box and mark that as a major level that I want to keep an eye on. And we can see on these next few candles here, they come down to retest where that bullish cluster is, and look at what they do. It comes down to retest it, it bottoms out and then bounces, and then bottoms out and then bounces. And then when it finally breaks, look at how significant that break is. So if we had this marked out as, say, a resistance level here, once that was lost, if you guys like to be breakout traders, I'm typically a reversal trader, so I would have looked for these bounces here. But if you'd like to be a breakout trader, you could see where that delta was coming in on the opposing side. So right now we have the green delta, the buyer delta, and we have support, then we break through, and then look at the opposing delta here. We have all that bearish delta coming in on that breakout. So if you guys are breakout traders, you could see that bearish cluster coming in and know that that would be probably a pretty good trade to the downside. So let me go ahead and show you, actually, before we move on, let me go ahead and show you a few examples of this happening on the platform here. So funny thing is, today actually had quite a few examples. You can see I was actually even marking it out from our live stream today of this happening kind of on the downside. But I'm going to come back to these examples in a little bit, because these examples are actually better examples for a later thing we're going to talk about. We're going to talk about delta absorption. So keep these examples in mind. We're going to come back to this here in a bit. So let me get situated here. Let me find my example really quick. And if you guys have any questions, feel free to put them in chat. I'll get to them. I'm going to come back to these examples here in a little bit because these are great examples for the one directional delta that we're going to come back to. So let me just move this to the side for now. But what I want to show you here is on these very strong candles, you can see where that delta is coming in. So what you want to typically do is you want to match where the volume node is also seeing a significant imbalance on the delta side. Okay, so where we see these volume nodes coming in, if we see a strong cluster of, say, bearish orders, we could mark that out as a resistance. And then same thing to the buy side. If we see a strong cluster of bullish orders coming in, which is also going hand in hand with a high volume node on the volume profile, we want to mark that out as a node as well. So there's a bunch of examples here. Basically, it happens in every single candle. But here's a good example right here. We have a very strong bullish node. You can see there's a strong volume node on the right side. And then on the left side, we have a strong cluster of bullish delta, one directional delta stacked on top of each other. Okay. Now we see clusters like this in pretty much every single example that we're going to cover today. So I'm not going to show too many of just these clusters. This is just the baseline that you need to understand so we can talk about the other setups. So here's another example right here. We have a lot of bearish deltas stacked on top of each other. So we had a pretty strong node right there, and then we broke through it to the downside. So we'll come back to these examples for the next few setups. So let me go ahead and pull up our PowerPoint again. And let's move on to the next one here. So the next one is going to be on delta absorption. Absorption is when a large amount of delta cluster together, but they're not pushing the market in their favor. So when you have a large cluster of bearish delta, what would you imply with that? You would think that that would be bearish, that it would be trying to go down. But if you see all that delta coming in and hitting a level, let's just pretend like this level right here. Let's say it's 5,000. Let's say that price level is 5,000. So we see a lot of bearish orders coming into that 5,000 level, but they're not able to go below 5,000. They keep getting stuck at that 5,000. So that is when they are being absorbed. There's a ton of delta in one direction, but they are not getting what they want. Okay. So bullish delta clusters typically look for a higher value. Bearish delta clusters typically look for lower value. Now, here's the key point to determine if the cluster is being absorbed. Is the volume falling off dramatically? If you guys are in here, if you are very familiar with footprint techniques like absorption and exhaustion, I personally teach these two concepts as one concept. So if you're familiar with what is known as exhaustion, this would be known as exhaustion. But I teach them both as absorption just to make it easier to understand because they are both traded the same way. At least I trade them the same way. So if you've heard the term exhaustion, you're like, hey, that's not absorption, that's exhaustion. It's because I teach them the same. So let's take a look at this example here. So we have a big bearish cluster on the low of the candle. That's another thing you want to look for. You want to look for these on typically the lows of candles or the highs of candles. And I like to look for these on a 30-minute chart. You can use them on different time frames, but typically I like to use them on a 30-minute. Okay, so we see a big bearish cluster of delta on the low of the candle, but we see a dramatic fall off in volume. Okay, so those two things together, big cluster in one direction, and then a dramatic fall off in volume. Then we want to see price going against it. Okay, so in this example, you can see on our candle, it's kind of hard to see on the stream, I'm sure, but there's a line right here. That's where the current price is. So now we know there was a lot of sell orders on the low of that candle. They were not getting what they wanted. They were not getting any profit, I guess you would say. Like pretend like you were a seller here. You would want this to go down, right? You want to see some profit. They were not getting any profit. So now we were starting to push away from those orders. So when you start to push away from them, if you wanted to take, like, say, a reversal trade, you could put your stop loss kind of below where that absorption is happening. Because you know that if they do finally break that absorption, it would most likely be continuing in that direction. Okay. So for a reversal trade, we could use that as, say, a support and then look for the trade to the upside. Another example down here is we have a small bearish node on the low of this candle, and this candle closed very strong to the downside. We can see decent volume on the low of the candle. We can see decent bearish delta on the low of the candle. But on the next candle, those sellers, once again, did not get any profit. So that entire zone right there on the low of the candle that was all bearish orders, they were not able to get any profit. So we could use that as kind of a reversal point. Okay. And let me go back to Addis here and I'll show you guys a couple of examples. So here's a really good example of this happening to the downside. So if we look at the high of this candle here, we can see that there is a decent amount of bullish delta coming in on the high here. Let me go ahead and mark this as a bullish node. So we can see a lot of bullish delta coming in on the high, and we were in a pretty strong uptrend. You can see the price was just pushing very aggressively to the upside. So if we have buyers that are coming in on the high of a candle, they should be easily getting what they wanted because we're in such a good trend, right? But they're not getting what they wanted. You had these buy orders come in, and then the volume just dramatically fell off to the upside. So if you were, let's say you were a breakout trader, and let's say you bought the break of this candle high right here, and you got a little bit of profit, but then you saw the volume like this just dramatically falling off with that delta cluster, you probably want to get out of your trade because that is the opposite of what you want to see. As a buyer, you want to see the volume nodes continue to build up with the delta. You do not want to see them kind of conflicting each other, right? So we had a bullish cluster, but the volume was falling off dramatically. Therefore, the buyers are being absorbed and they're getting pretty weak. Okay. So in that example, we could have implied that it was going to continue to the downside. Here is another little example right here. So this example, you can see a ton of bearish delta coming in after a strong push down, which should have pushed us down, which eventually it did. But if you're a scalper, look at what this gave you. So we had a strong cluster of bearish delta. Then we had a dramatic fall off in volume, which led to a pretty strong bounce. This is a bounce of about 10 points. So for micro scalpers, that's huge. They only look for a few points, right? So if you guys really like to trade for only a couple of points, even though this did end up going down, it did give you a 10-point bounce. So you got to watch out for those. Another example here, I'll just start going through these a little bit faster now. Here is another bearish example, same thing. We had a strong cluster of bearish delta on the left side of the candle here. You can see how they're all red, they're all negative. And then the volume is falling off dramatically. Look at what happens. Yes, it does end up going down, but in the short term, this bounced, let's see, about 15 to 20 points. Let's see, do we have any more examples of this? I think we had a couple more marked down. Let me see. No, so actually the next few examples we'll get to here in a little bit. I have some examples on one directional delta. So before I move on, do you guys have any questions about the absorption? Before I move on to our next topic? Sorry, I'm moving my screen around so much. The examples are kind of spread out. Let me see if we have any questions here. So would you use the candle wicks as stop losses or heavy delta clusters? It depends. So let's say in this example here, we have a delta cluster on the upside. It got absorbed. And let's say we took a short. Let's say we took a short on the sweep. So we swept that 30-minute high. And let's say we entered our short there. They're kind of the same thing. So if you use this cluster as a stop loss, it would also be the same as using the wick as your stop loss. You see what I'm saying? So a lot of the times they're going to line up because you're looking for these absorption levels typically on the high and the low of the candle, which also is the wick. I see a lot of questions about settings. I'm going to get to my settings at the end, guys. I'm going to show all of my settings at the end of the webinar. So if you guys have any questions about that, hold that until the end, and you guys will be able to copy all of my settings. I know it's very important if you guys want to follow along on your charts, but just to save time, I'm going to put it at the end. In one directional delta, yeah, we'll get to that pattern here in a second. What about when they're in the middle of candles? It's typically not going to happen in the middle of a candle. Very often, the absorption pattern is only going to happen on the high of the candle or the low of the candle. Because think about what's happening if it's in the middle of the candle. It's technically not being absorbed if it's in the middle of the candle. Because if it's in the middle, that implies that there's a price to the above it and there's a price below it. You can't be absorbed if there is a price above and below it. Does that make sense? Because whoever's in that absorption is getting what they want. They're either getting the price to the upside or getting the price to the downside. So therefore, it can't really be absorbed. But okay, let's go ahead and go back to our PowerPoint here, our presentation. And let's go to our next pattern. So our next pattern we look for is one directional delta. Basically, as the name implies, it's strong delta throughout the candle in one direction. Delta is mostly imbalanced to one side. Price is moving rapidly with delta. So if you guys see, like, say, news announcements or data coming out, this is when you'll typically see these candles. When traders are heavily trading for maybe earnings or data or news, they will be pushing the candle very heavily in that direction. And they will, well, you'll want them to have delta in one direction and volume and price following in that direction. Okay. So here's an example here. We have a breakdown starting. We broke the prior candle around this level here and then just pushed heavily down to the downside. And delta has a few clusters here and there. Like there's a little cluster right there. I know it's hard to see on the picture, but there's a little cluster right there to the buy side. There's a little bit of buyers there, a little bit of buyers there. But overall, it's almost entirely bearish. And these little diamonds here, I'll go over this at the end when I talk about my settings. These little diamonds are showing block trades. So those are really big orders, which heavily push the delta. So delta is very bearish, and we're building up these volume nodes and protecting them in the direction of the candle. Okay. So same thing here, very bearish. Like I said, you do see buyers here and there, but for the most part, the candle is almost entirely one directional. And then an example here would be, you can see when we start to break this low, we have some buyer delta on the high of this node right here. But as soon as you start losing that node, you start heavily pushing down. And you can see that bearish delta maintaining throughout that entire push down. So if you're a breakout trader, this is what you really want to see. You want to see your delta following you entirely. You don't want to see a bunch of bullish delta fighting against you if you're taking that trade bearishly. Okay, so if you pretend like you were taking this breakout trade, if we sold the bottom of that node there, This is exactly what you wanted to see. Very bearish delta as you're pushing down. So let's go ahead and look at some examples on the platform here. Oops, sorry, let me go back. And let's look at these one directional examples here. Okay, so look at this candle right here. So we have a very strong downtrend, right? And the boxes, like I said, those are the candles. So if you guys are used to seeing candles, that's what that box is. So our candles are pushing very heavily in one direction. And let's go ahead and confirm if the delta is very one directional. So look at this right here. This entire second half of this candle is showing pretty much nothing but bearish delta. Little bit weak on the volume side, which is okay. I'll talk about that here in a second. But the delta is very heavily bearish. So one thing to look at when you have LVNs, if you guys are familiar with volume profile, there are HVNs, which are high volume nodes, and there are LVNs, which are low volume nodes. So when you have very one directional delta, when you have these candles that are heavily pushing to one side, they don't spend a lot of time on one level. So therefore, they're not doing a great job building up those volume nodes. So it's okay if you don't see very large nodes when you have these one directional candles. If you guys are familiar with market profile, that would be known as like a single print. You're kind of single printing here. So when we have this bearish delta heavily pushing in one direction, we don't really see a significant volume node to go hand in hand with that delta cluster, but that's okay. As long as it's staying in that direction and not heavily bouncing back, that's okay. What you want to look out for when you have this very one directional delta is these little pockets of bullish delta that build these nodes up. So if you start building up these nodes aggressively to the opposing side, so in this example, we have a bearish one directional candle. So the opposing side would be to the buy side. If we start building up a strong cluster and a strong node together going against that direction, that's where you want to start worrying about it, right? So right here, we had a little bit of a support node building, but eventually, obviously, we can see that it lost that node, which once again, if you guys are breakout traders, that's a pretty good continuation trade because we saw them trying to build up a strong support going against this one directional delta, but they were not able to break that trend. So once they lost that node, it continues. So then the bearish delta continues, the LVNs, the low volume nodes continue, and then we just keep pushing down. Okay. So we want delta and delta and price to be following in the same direction, in this case, to the downside. And let's look at a case to the upside. So here's another example, but this one is a very bullish example. So this one, look at the clusters here, the bullish delta. Look at the bullish delta on the left. It's extremely green. You have these pockets of very high bullish delta as we are pushing. We have little bits of bearish delta here and there, but not too much. Sorry if you guys are hearing that beeping noise. That's just a block trade alert. So we have very bullish delta to one side. And this time it actually does have pretty good volume going hand in hand. It doesn't need it, but it does make it better. So we had bullish delta here, pretty strong node, bullish delta here, strong node. Same thing here, very bullish delta, strong node. And then look at the price. The price is just continuously pushing in the direction of that delta. Okay. So look for those very large stacked clusters that are pushing in the same direction of price. Basically the opposite of what we just talked about with absorption, because on absorption, they're not getting what they wanted. You have that stacked delta, but price is going against them. In a one directional delta candle, you have the stacked delta, but price is going with that delta. It is not conflicting that delta. Okay. Do you guys have any questions about that before we move on to the next example or next topic? Let me see here. Yeah, I'm going to talk about my settings and my template later. I'll get to it at the end for sure. Let me see here. Do you target low volume nodes of previous candles in some cases? So targets are a little bit hard to talk about because it's very dependent on how you are trading. So a lot of traders like to micro scalp where they're only going for maybe a few points, sometimes a few ticks. Some traders like to kind of day trade. They'll go for 10, 15 points. Some traders like to swing trade. So it's really hard to say what to target. Personally, what I like to target is I like to target previous clusters, like previous delta clusters, value highs and value lows of volume profile, which I don't really have the time to get into volume profile very heavily today. But volume profile, value highs, value lows, maybe VWAP, those sorts of things. That's kind of what I target. 30-minute highs and lows are also very good. So what happens in the case where there is one directional bias but no volume at the bottom? So the top and bottom of the one directional candles doesn't matter as much. It's more so the clusters inside of the candle. Because the candle is covering so much ground in one candle, it's covering so much price. We want to pay attention to the little micro nodes that it's creating. So like in this candle here, what I would do typically on stream is I would mark out these little micro nodes. So we'd say, okay, guys, keep an eye on these nodes here. And then if price starts to lose these nodes, let's pretend like this line right here, let's say this is price. If price starts to lose this node, it's getting pretty bearish, right? And then we lose this node, we're getting very bearish. And then we lose this node, we've pretty much lost the trend entirely. So you want to keep an eye on those nodes as support in this case because it's a buyer candle. What's the total traded volume representing for this chart? I'm not sure exactly what you're asking. The total volume doesn't matter as much if you're talking about like the volume for the entire day. I look at volume on a profile sense where it's kind of tick by tick. So if you see this volume profile here, these blue bars, I'm looking at volume on every single level instead of just looking at volume as a bigger picture. And then if you look at my the top or bottom of my candle, this blue number right here, that's the volume for the entire candle. Sorry, guys, I'm losing my voice a little bit from the stream this morning. But okay, let's go ahead and move on to our next setup here. Okay, so our next setup we're going to talk about is the delta squeeze. This is a very rare setup, so I only have like one great example of this to go over, but it's a very powerful setup. So what we look for in the delta squeeze is a very strong reversal of absorbed delta. Okay, so you need to understand absorption that we talked about earlier to understand the squeeze because they go hand in hand. So very strong reversal of absorbed delta. Delta flips from one side to the other very quickly. So in this example here, we can see that we were in quite a downtrend. We had a pretty strong downtrend. But look at the lows of these candles. These are all 30-minute candles. And we are just getting completely absorbed on the lows. We are seeing cluster after cluster after cluster on the lows of these candles, but they are not getting what they want. So if you pretend that you are a seller down here, you are not very happy. If you sold the low of this candle, you are not happy. If you sold on this candle, any of these candles, you are not happy because you are not getting any profit. Okay. So all of these sellers that were selling to open, now there's always that argument. Are they selling to open or are they selling to close? For most of these examples, I don't really care if they're selling to open or selling to close. We just care about the pressure, the total delta on one side or the other. But let's pretend like a lot of these guys are selling to open, meaning they are shorting. They are taking these trades looking for lower prices. If they are taking this trade on these lows, they are not getting lower prices. So they are in danger. Now we have to figure out, where are they putting their stop losses? Now, the most obvious place to put your stop loss would be the highs of these candles, right? So if you want to be a seller down here, you want to use these highs of these candles or maybe some prior resistance or whatnot as your stop loss. So we can say that if we're breaking that level, they are being stopped out. They are being squeezed. What does the term squeeze mean? So in trading, the term squeeze is a very strong move that is taking a lot of traders out of their trades. So let's say a bullish squeeze would be squeezing the sellers out of their trades. So all of those sellers that are being trapped on the low, they are being very quickly taken out of their position. Think about traders that trade breakouts, but they're not actually breakouts. So all of those traders that are buying a high that ends up not going higher, they are going to put their stop loss on a prior support just below them. And then it starts to heavily reverse, and all of those breakout traders are now getting stopped out. So you get a combination of people buying to close and people buying to open. If you're in a short trade, how do you close that trade? You have to buy to close that trade. You have to become a buyer to close your short trade. And if you're in a long trade, how do you open that trade? You buy to open that trade. And then you have to sell to close that trade. Okay. So when a squeeze is happening, it's because you have a combination of those things happening together. You have the sellers that have to buy to close their trades because they are being pushed out, they are being squeezed out. And then you have the buyers that are seeing that squeeze and they're like, okay, that's a really good trade. That's a lot of momentum that I can take to the buy side. So in this example right here, once they saw that 5 candles back to back were failing to put in a low, and then we started to break these candle highs, those buyers are like, okay, this is probably a pretty good breakout trade. Let me go ahead and buy that. And the sellers are like, wow, I really need to get out of this trade. And they started closing their trades. So then we got a really strong push to the buy side. Okay, so let's go ahead and pull up. Oh, let's not go forward yet. Let's go ahead and pull up an example of this happening. So this example, this is a very rare pattern. So I actually have to pull up the old contract to show you a good example of this. And here's a little trick if you guys didn't know, is you can right click your chart and you can go to date and you can load a specific day. And I believe the day I need is this one. Yeah, there it is. So that's a little trick if you guys didn't know how to quickly find a certain day. Okay, so here is that example that we were just talking about. So look at all of this bearish delta. So much bearish delta on these lows here. Bearish delta clustered up there, clustered there, clustered there, there, and there. And none of these clusters are getting what they want. Because bearish clusters, like we said earlier, they typically want price to go down. And price is not going down. Price only went down 2 to 3 points. And then we started breaking these 30-minute highs. And then look at how quickly price goes up. And then look at the shift in the delta here. We had a very big block trade on the buy side, 1,400 contracts, 2,700 delta there. And then we had 1,800 there, 5,000 there. The delta's just shooting up to the upside because they are getting that combination that we talked about. They have the combination of closing the sell orders and opening the buy orders. So there are two ways you could trade this. You could trade it as absorption that we talked about earlier. This entire cluster down here, let me make that a bearish cluster. This entire cluster down here, this overlapping delta, we could trade to the upside using our stop loss kind of below those clusters. Or we could be more of a breakout trader. Now, I prefer to be a reversal trader, but we could be more of a breakout trader and wait for that squeeze to happen. So when that squeeze starts happening and we break out of that range or break out of that absorption, we should start seeing that delta very heavily come in to the opposing side. So the opposing side in this case would be to the buy side because the absorbed delta is bearish. Okay. So you could be a breakout trader when that breakout starts to happen, maybe a range breakout or however you want to trade it. 30-minute highs, the nodes, many ways, right? The only problem with being the breakout trader is the stop loss is a little bit harder. Because if you trade the lows, the stop loss is easy. You just put it below the lows, and if it breaks the lows, then you're done. But you are predicting a little bit more here. You're not waiting for as much confirmation. On the buy side, you have more confirmation, but your stop loss is a little bit in the danger zone, I guess you would say. Because now you would want to put your stop loss probably below the low, but that's pretty far away. So let's say you bought up here at 39. That's a 10-point stop loss. Most people are not okay using a 10-point stop loss. So what they would be doing is they'd be putting it, let's say, at like 5 points. In this example, yes, you probably would have been okay, but you don't always know that. That's in hindsight. So you'd have to bring your stop loss a little too close to the breakout, and that's why I don't like to take it as a breakout usually. But all right, that's a very rare pattern, so I don't have another great example for that. Do you guys have any questions for this pattern or any of the patterns that I've gone over in the webinar today? And if you guys don't have any questions, we'll go ahead and move on to my settings, and I'll start talking about how to get your charts to look like this. I appreciate you guys all being here, by the way. If you guys enjoy this type of content, make sure to hit that like button. Make sure to subscribe to their channel. Let me see here. Hey, William, you said absorption means trapped market orders. And for a valid absorption, we will need a high delta plus low volume. And for one direction delta, we need the volume to confirm with the delta. Yes, exactly. So absorption is basically when you have trapped traders that are trying to push the market in one direction, but they are not getting what they want. So they are trying to push the market. Let's say if the bears are being absorbed, the bears are trying to push the market downward. It's not going downward. They're running out of steam. And then for one directional, you need the price and volume to be following in the direction, and that candle to be following in the direction of that delta. So if all that delta is coming in bearishly, price and the nodes should be following. Sorry, Ravi, I moved away from the example that you were asking about, so I'm not sure exactly which candle you're referring to. Or do you mean this example here? Do you mean this example or another example? Does this work on a 1 minute or a 5 minute? So funny thing is, on my stream, I used to use this on a 5 minute. All of these techniques that I'm teaching today, I used to use on a 5 minute. Nowadays, I like using a 30 a lot more because the market is so fast. There's just so much volatility right now. I like to go to a higher time frame. But yes, you can use these on a 5 minute if you prefer the lower time frame. Yeah, Jerry. So I use very heavily volume profile, market profile, and delta footprint. I just don't have the time today to go over all the topics. So today we're just going to be talking about delta footprint. Who knows? If you guys enjoy the content a lot, maybe we'll come back and we'll teach volume profile and some other things. Hey, Mike. No, I'm not looking at SPY and Qs too much when I'm trading ES and NASDAQ. I'm just heavily focusing on the futures. Hey, Ravi, you said, okay, so on this example, you said on the fifth candle low, 1, 2, 3, 4, 5. So this one right here. On the fifth candle low, there's a lot of bearish delta and the volume didn't seem to be lost that much. Yes, so I see what you're saying. So you're saying that like on the low here, the volume doesn't fall off as dramatically as these ones right here. So this would have been a little bit harder to see at the time. So at the time, you would have had to wait for a little bit of confirmation there to see if it was going to hold below those candle lows. So in this case, we see that look at the price. The price pushed up and then built bullish delta on the other side of that cluster. So it gave you the confirmation just a little bit later. Do I use aggregate ticks? No, I don't. I use the individual ticks. I see a lot of you guys have questions about different concepts like volume profile, market profile. Unfortunately, I can't go over all that today. We're going to keep it focused on footprint. So if you guys have any questions on footprint, delta footprint, ADIS, all the settings, I can go over that stuff today. Okay, so if you guys have any more questions, feel free to put them in chat. And while you're doing that, I'm going to start going over my settings here. All right, so let me go back to my presentation. Actually, no, that's good. We can just stay here. Let me get out of full screen here. I know, sorry, my screen's going to explode here. I've got a lot of stuff going on. I will go over my charts here. Okay, so my settings for the footprint, if you guys want to take a look, I'm going to go ahead and show them on screen. I'm not going to show them all for a very long time because you guys can just pause the screen or go back to it later and get the settings. But I'll go over all my major settings for you guys here. So if you want to match my charts exactly how they look, here are my visual settings. These are basically personal preference. These ones don't matter as much. These ones are just kind of how the chart looks. The settings I'm about to show, those are the ones that really matter, that actually change how the chart functions. So these ones are just visual settings. They're not going to change much. These are the important settings. If you guys want to match my delta footprint, you need to match these settings. The biggest thing you want to change is you want to have it set to delta on the top here. You want to have it set to full row. For color scheme, I use delta. Then I use an additional footprint. This is how you have the volume profile on the right side of the candle while you're showing the delta on the left side of the candle. So make sure you have the additional footprint turned on. I have it set to volume profile. And then here are all of my settings if you guys want to match it. Everything else, I don't think it matters as much. But the stuff at the top, you really have to match these perfectly if you want to match my chart. Okay. So make sure you guys have those matched. And then for indicators, for my indicators on the chart here, the biggest one I would recommend you use is these diamonds here, these block trades. Let's go into my indicators here. Sorry, getting some water. So for my indicators here, the biggest one you want to match if you guys are trading ES and NASDAQ futures is I would match the big trades indicator. This is the block trade indicator that Addis has. It's a very good indicator. So I have it set to cumulative trades. I like to use 300 contracts. 300 contracts for a block trade to show up on my chart. Now, typically, I would say anything over 100 contracts is a block trade, but for the major ones to show up on my chart, I want to see 300 or more. And then if you want to match how it looks, you need to match these settings perfectly. So I have it set to diamond, visual objects turned all the way down, and then cluster all the way up. Another cool indicator you guys can use is called delta turnaround. What this indicator does, let me show you here. Give it a second to load. There's no sound. There should be sound. Let me see. Can you guys hear me? Testing, testing. You guys can hear me? Awesome. Okay, let me see if there's an example of, here we go. So here's an example of the delta turnaround indicator. So the delta turnaround indicator puts this little arrow on the top or the bottom of the candle. And if you guys are familiar with my sweep pattern that I like to look for, is it's when the 30-minute candle's high or the 30-minute candle's low is being taken out, but then reclaimed. So this candle here is breaking this 30-minute candle's high, but then it's reclaiming it. So what the delta turnaround indicator is going to do is if you have a break in one direction, but the delta is going in the other direction, it will mark that with that arrow. So in this example, we have a 30-minute high being taken out, but the candle is negative delta. It's negative 2,800 delta. And that's another one you guys want to throw on here. If you want to have the stats above the candle for a green candle or below the candle for a red candle, that's called candle statistics. And I have it set to volume and delta. That's the only two things I'm showing. You can have it set to show trade count, duration, clusters. I like to just show volume and delta. And what that's going to do is that's going to show you the stats for the candle. So it's going to show you how much volume that candle traded and how much delta that candle traded. It's very good for candles like this. So like this candle right here, you see how this candle is breaking that 30-minute high and we were continuing that trend? But look at the delta. The delta is very low and the volume is very low. So the volume is going down from the prior candle and the delta is heavily dropping from the prior candle. So that's a good example of when a trend is probably coming to an end because our volume is heavily falling off and our delta is heavily falling off. All right, what else do we have on here? We have a couple of EMAs, just standard moving averages. I like to use the 8 and the 24 EMAs. You can throw on a watermark if you want to have your instrument and time frame showing up on your chart. I like to throw on the bar timer, very good indicator for knowing when the candles are about to close. And then candle stats we already went over. So those are all my settings that I like to use on the footprint chart. Now, I have a lot of other charts, but we don't really have the time today to go over every single chart. But just to give you guys a brief rundown on what I like to look for, I have a 1-minute chart here, which has a couple of moving averages. I like to watch VWAP. I like to watch the cumulative delta. And then this chart down here is just a mirrored chart, same exact thing, just for NASDAQ. So this chart's for ES, this chart's for NASDAQ. A couple of indicators I do want to go over because they tie into what we're talking about today. This is a major one you guys want to look for. Stacked and balanced, one of their best indicators. The stacked and balanced indicator, if you guys remember earlier in the webinar, I was talking about the delta clusters, right? This will show you the delta clusters that are heavily one-sided. So if they're heavily on the bear side or heavily on the buy side, it will highlight it with these rectangles. And you can set how often you want these to be highlighted. The settings that I like to use are 200, 3, and then 30. It doesn't show up on your side. Try to match my settings and it should fix your problem. And this is on a 1-minute chart, by the way, so it's going to be different depending on which time frame you look at. Another very good indicator if you guys want to trade delta footprint is the CVD, the cumulative volume delta. That's this indicator right here. So instead of looking at delta on a tick by tick basis like we do over here, this puts all of the delta candle by candle and puts it all together in kind of a, well, like it's called, a cumulative average. It puts it all together into one moving chart. So a funny thing that we've been seeing today is our delta has been completely going against our price. And when this happens, typically delta wins. So if price is going in one direction and delta is heavily going in the other direction, most of the time, delta will win. What I mean by that is the trend on delta will be the prevailing trend. So in this case, the trend is bearish. And as we can see, the trend is eventually shifting to the downside. What's the line on delta? I like to have an average on delta. So if I go back to my indicators here, let me make this bigger so you guys can see it. So I like to have a moving average on my delta. So here is the cumulative delta. That's the CVD indicator. If you want to put a moving average on it, which one is it? Right here. This is how I have my moving average. Make sure you change the source to the delta. So put a moving average on your list, change the source to delta, the CVD, and then make sure the panel is the same panel as the delta. So if I go to my delta, my panel is, where is it? Right here. My panel is 1. And then if I go to my EMA, my panel is 1. Okay. So that's how you put the moving average on delta. The reason I use 60 is because I use a 1-minute chart. So 60 equates to an hour. That's a 1-hour average. Give or take a little bit because it's an EMA. And EMAs are slightly weighted. So this would be the trend of the delta, right? I can make this a little bit bigger so you guys can see it. So that's kind of the trend line of the delta. So if we're staying below that, then we're downtrending, right? The other charts that I have here, I have a time and sales, the smart tape. I have another smart tape and another smart tape. So these three, why do I have 3 separate tapes? They're filtered by different settings. So this tape right here, this one is filtered by 25. So anything larger than 25 contracts will show up on this tape. Then I have it filtered again for anything higher than 100. So this would be the block trade tape. So any of these I would consider block trades, big trades. And then I have the same thing for NASDAQ. So for NASDAQ, I have a NASDAQ smart tape set to 50. Okay. And then finally, I have a market profile chart with a volume profile side by side. And here are my settings for that. So here are my visual settings, which are the same as the other chart. Here are my cluster settings, which are set to volume profile. I do not have an additional footprint. This is how I'm getting an additional footprint. It's actually an indicator. So if you right click the chart, if you go to indicators, this is the indicator that I'm using. I'm using the market profile and TPO indicator. So all of these settings in here are very important. So I'll show you all the settings. Just make sure if you want to match my chart there, make sure all these settings are matched. A very important setting is this one right here. Prices per row. When I use my market profile, I like my TPOs to be 2 points. So every single box that you see here is 2 points. A lot of market profile traders don't like to do that. They like to have their settings on automatic. So based on the current volatility, it will change. I don't like mine changing. I like it being the same every day. So I have mine set to 8 ticks, which equates to 2 points. So very important setting there. That's pretty much the most important setting. Everything else you definitely want to match, but if you don't match that setting, it will break the indicator. It won't look the same, basically. Is that on ETH or RTH? Good question. It's on RTH. When I'm looking at the market profile, I'm only looking at 930 to the close. I do not look at the pre-market when I'm looking at market profile. I only care about the cash profile, the one that starts at 930. And the last thing I didn't go over is the DOM. So here is my DOM. And let me grab my settings. So this one, I actually don't think I can show you my settings for this one because this is like I did some custom settings on this one. Let me see if it will let me show you my settings. Let's see here. Oh, here we go. So I have it set to the histogram profile on the current day. So the left side right here, this is the current day. And then the profile on the right, this one right here, is the weekly profile. So today's Monday, so they look identical because it will start on Monday. But if we were on Friday, these profiles would look very different. So here are my settings if you guys want to match that for the DOM. So I have it set to current week volume and current day volume. And then all the other ones are default: bid, price in the middle, and then the offers on the right. And that's it. That's pretty much all my settings. Do you guys have any questions about anything on my screen, all my added settings? Sorry, running a little bit long. I was trying to aim for about 45 minutes. We're going a little bit over. It seems like you guys are enjoying. Let's see here. Hey, Mauser, you said delta crossing from positive to negative isn't as important as the overall trend. You mean on the cumulative delta? No, I don't really care so much about it going from like negative to positive. So crossing the 0 line, I don't really care so much. I really don't even care about the number that much. I really just care about the trend. Basically, today is a great example of what I look for on the cumulative delta. Is it following the price trend? So the price trend is very obviously, to the upside, but the delta trend is very obviously going down. It's very bearish. So that's what you want to watch out for when they're not trending together. That was the stacked imbalance indicator. I have it set to 200, 3, and then 30. So the imbalance ratio is 200, so basically 200%. The range that it looks for, which by the way, on Addis, if you guys want to know what these mean, just hover over them and it will tell you. So the ratio is the minimum value ratio, so 200% basically. You can also click this button right here and it will take you to they kind of have like an online database that tells you about the indicators. You can click that little button right there. No, good question. The stacked imbalance on NASDAQ is slightly different, I think. The stacked imbalance on NASDAQ is 200, 3, and then 15. And these change. So don't have these set in stone all the time. You do have to adjust these based on the volatility. So these are not set in stone numbers that I use all the time. Pretty much everything else, but this indicator, I have to change every now and then. All right, did I miss any questions? Let me see here. If I completely missed your question, guys, feel free to put it back in the chat. Let me see here. How do I use the stacked imbalance indicator with the absorption? So they don't always go hand in hand. So I wouldn't always be looking for, like if I was going to trade a absorption trade and I didn't see the stacked imbalance, that would not be a reason to not take the trade. What you want to look for, let's say, let me see if I can find an example for you. Let's say like these ones right here. You see how these rectangles, these stacked imbalances are untested? The untested stacked imbalances give you good targets. So if you don't have any other thing to target, like if you can't target VWAP, you can't target volume profile levels, you can't target a delta cluster, like maybe you're just missing targets, you can't seem to find them. These levels are pretty good targets because they like to be retested. So if you took a short up here, let's just say we took a short, let's say there was some kind of absorption up here, and we saw that these imbalances were left open, we could target those. So they're used more so as targets, not as much for entries, I guess you would say. All right, let me see. We're coming to an end here. If you guys have any final questions, let me know. I appreciate you guys all being here. If you guys enjoy the content, make sure to hit that like button and subscribe to their channel. I appreciate all the support. Show the cluster settings one more time. Yeah, let me go ahead and show them. And they'll have this recorded for you guys. So if you guys missed anything, you can go back in the recording. Here are my cluster settings. The most important settings are the delta, the full row, and then color scheme. That's kind of personal preference. I would set the delta. And then this one is very important as well. If you want the volume profile to be next to your delta ladder, you have to click this button right here, additional footprint. And this is set to a 30-minute, by the way. So if you don't have your chart set to a 30-minute, it's going to look slightly different. Yeah, you definitely are going to have to rewatch it if you missed a little bit. It's a lot of information. But all right, guys, I think we covered pretty much everything. I'm not seeing any major questions I need to go over. I appreciate you guys all being here. I'll go ahead and give it back to Addis. Do you guys have anything you want to close up with?
Okay, thank you, DejaBrew, for that highly informative webinar. I need to say that I was personally absolutely amazed by the amount of the information and about the things you mentioned. Also the setups of the charts and indicators. That was very, very useful. And thanks for everyone who joined us today. Don't forget to subscribe so that you can join us next time. If you enjoyed the webinar, please give us a thumbs up. We will see you next time on the Atas channel. Bye for now.